Hello, welcome back, traders. Thank you for tuning in to another episode of Market on Mic. So, if you're actually listening to this episode for the very first time, or you're listening to this show for the very first time, please do well to check out our previous and earlier episodes for more trading tips and insights. So, there are a lot of information that you don't want to miss out on in our previous episodes. So, just go back, listen, and grab all of those information and value. All right. So our goal has actually remained simple, which is to give you the information you need to learn, trade, or invest smarter, and most importantly, to make a whole lot of money for yourself. Right. So in today's episode, we'll actually be discussing something very, very important. But before we go forward, I'm not alone on the show. I have my co-host with me.
Hello, everyone, and it's Natasha. So, welcome to another exciting episode of Market on Mic. And if you are actually listening to this for the first time, please do well to go back, listen to the previous episode, because every single one of it has something for you to learn from, and you take advantage of it, because just like what Daniel said, the goal is very simple: to give you information that you need to learn, trade smart, and to make money.
Yes, that making money is very, very important.
Very important.
So, like I was saying, in today's episode, we'll be breaking down some basic trading questions. So, if you're actually new to trading or new to the trading or investment environment, or you've been in the game for a while but you're still struggling one way or the other, well, this episode is actually, I hope we actually is able to create solutions for those particular challenges. So, we'll be asking questions on possibly how to start trading small, how to set up a trading account, simple way to plan your trades and the likes, right?
Yes, guys. So go grab your favorite drink, relax, and let us actually dive right in.
Yes, let's dive right in, guys. So, Natasha, I want to ask you a very simple and a brief question. So, in a situation, because trading actually requires money, right? Requires funds. So, in a situation where I want to start trading, but I really don't have that money, like those $1,000 or $10,000 to start out trading. I have maybe possibly $50 or $100. How do I actually make the best use of it and actually make money?
Okay, so like we already spoke in our previous episode before now, the type of markets that we do have and the risk associated with trading it.
Yeah, that's true.
So for someone who is probably starting out, or you have a very small capital, the first thing you want to do is start by choosing a market that lets you begin small, like the currencies market, that is Forex. I'm sure in our previous episode, we already talked about the risk associated with all of this market, and we know that the Forex market is really, really safe. So with a small capital, you would want to do the Forex, and of course, you want to use leverage carefully, as too much can actually lead to big losses. The more you expose your account, the more losses you are actually exposed to. So you want to make sure that you are on a very, very safe market that allows you to grow. And of course, don't forget to practice on a demo account.
Yeah, especially for those guys just starting out.
Yes, it cannot be overemphasized. Yeah. As much as it can be exciting to, I actually want to make money, so I'm just jumping right in, the demo saves you quite an amount of stress. So it's like playing a game where you learn the market rules without risking real money.
Yes, just
yes, being able to understand what the market offers and your money is not on the line. So the idea with this particular one is to build small and steady win over time.
All right, thank you very much for that, Natasha. And that's very true. I thought the demo account, it doesn't mean you need to practice on a demo account for months or so, not just to avoid those rookie mistakes of maybe pocket down, maybe go into a trade by mistake, then you put your phone in your pocket, or you mistakenly go into a trade, and all of those things. Just try to use the demo account so that you can familiarize yourself with the trading platform and interface very well without any problem. All right, so thank you very much, Natasha.
Yes, so I kind of disagree with you on that one, where you said that you can spend as much time on your demo. Don't forget that if I had only $100 in this lifetime and that was all I had to actually build myself up, I would not want to make a mistake. So I think that you can take as much time as you need. Don't forget that we do not all have the same learning capacity. As much time as you need on your demo, practice your strategies on it as many times as possible so that, like you said, the idea is to build small. So once you're starting small, you're not looking to running faster than anyone. So
I agree
it's to
with you,
build
though.
small and steady win over time.
Or the most important thing is don't stay too long on the demo. That's just the thing.
Okay, if you say if you say so.
So that
But
means
take
it
as
tends to
much
affect
time.
your psychology and also those
Yes,
emotions may not be
but of
there.
course, getting to understand what you're doing, right, is just as important as getting to. If you miss it on the demo, you definitely miss it on the live account,
Oh yeah,
right?
at least we agree on one thing.
Mm,
Starts from the
the
demo.
demo, exactly.
All right, that's good. Yeah.
Okay, so Daniel, if I was actually going to start up a trading account, and what are the steps in me setting up a trading account and choosing the right broker?
All right, that's a very, very important question because your broker is just like you finding the perfect partner for your trading journey. So you can't miss it doing that. All right. So
Yeah.
when you're actually starting out or trying to open up your trading account or choose a broker, you need to actually do a lot of research, right? To find out the perfect or the right broker for yourself. And one place to start is to check out the brokers that are actually regulated by trusted authority, probably SEC, FCA, and your likes, because you want your money to be safe. You don't want to put your money in a broker that will just probably close down or close up in like,
Definitely.
and your
Or
money is just
remove
gone.
your money.
Exactly. So you want to make sure that you're partnering with a company or a broker that is going to actually keep your money safe, and that's very, very important. All right. So another thing is you want to compare their transaction fees like spreads, commissions, swap. Swap is more or less like the fee that you're charged to take a trade. Maybe you hold your trade over to the next day. All right. So those are the kind of thing you want to check, compare different brokers, which one has or which broker has a lower fee or the lower spreads, because you want to stay with those kind of brokers because it means more profit for you at the end of the day. So make sure that the broker offers assets that you want to trade.
Yeah.
You can want to trade maybe indices market and you go for a broker that doesn't offer some certain indices. All right. So you want to make sure that the broker you're going for has the assets that you're interested in trading. All right. So you can also test their platform with a demo account. Like I
Of
said,
course.
we agreed on that. All right.
Yeah.
Yeah. So, and when you're ready, you can go ahead, open a real account with your small deposit and actually start out your trading.
Okay, that's actually very reassuring, knowing that brokers have to be regulated. There are certain authorities that help you to know if your money is actually going to be safe or not. We're actually in that time whereby trading is evolving, and we have a lot of brokers in
Out there.
town. Yeah,
Lot of
you
them.
would see some promising you heaven and earth. In fact, I know that there are some who tell you that you don't even have to place a trade. You just start making the money. Or you just
Really?
want to make sure that whoever you're doing it with, this is like a lifetime partner we're talking about. This is money we're talking about. So you want to make sure that this person is trusted. And how do you figure that out? Is through certain regulations that shows that, okay, these people are registered, they are safe, and your money is also safe as well.
All right, yeah.
Thank you for
very
that
much.
one, Daniel.
Yeah, you're welcome anytime. All right, so now in a situation where I'm in the trading game, right? I've started trading, I have my money deposited. So how do I create like a plan or a trading plan that can help to maybe measure how well I'm doing in trading or how or all those realistic goals? How do I get to set them?
Okay, so I think this is the hard part when it comes to trading. Funding your accounts is just like easy, just a transfer or something. But when you talk about trading plan, you want to think of it as your treasure map to success.
I like that. Treasure map.
You want to know that, okay, now that the money is here, how do I grow it? So you want to start by choosing your trading styles. So when we talk about trading styles, that is, are you a day trader, a swing trader, or a long-term investor? And I think this would also come into play was when we talk about the risk, understanding your risk appetite.
Yeah, and also time availability.
Exactly. And just how available you are.
Yeah.
Because you do not want to stand on the road and because you're in a hurry to take a trade. Trust me, those things would make you make quite an amount of mistakes. So you want to know what times best suits your trading style. So are you a day trader, that is, do you want to trade every day? Are you a swing trader, that is, do you want to take long-term trades, or are you in for the long run or the long ride? Then you want to set simple rules for when to buy and sell. That is using easy tools like charts or news updates. So you want to know whether you're a technical trader, you're a fundamental trader. As long as I do not really buy the idea of saying I am this type of trader, especially when it comes to technical and fundamentals,
Yeah.
because I believe that the two work hand in hand.
Mhm.
If you're trading the market at this particular moment, you know that you cannot ignore one for the
For
other,
the other, that
because
the work hand in hand.
everything is playing out. But getting to understand what works for you would do you a lot of good. And of
Yeah.
course, deciding how much money you are willing to risk on every trade. I think people usually do about 1 to 2% of total fund. So you set small profit targets and review your plan often, so that you can actually make changes as you learn. Don't forget, like, that's what we stated earlier, using a demo. If
Yeah,
you're
true.
using a demo, you realize that, oh, there's something wrong in in this particular strategy.
Strategy,
You're
yeah,
able to
true.
correct it. But correcting it, you're also correcting it on the demo, see how it works. And I used to tell my fellow traders that when I'm trying a strategy, I try like 10 times. If it works 7 times, I believe I have a good one.
Yeah, true.
If it works less than that, I have to go back to the drawing board. So getting to understand how much you're willing to risk, getting to understand your style, what is best comfortable for you, would do you a whole lot of good.
And yeah, that's very, very correct. And you know what, this trading style that you made mention of, I've had few, big discuss with few traders, and finding out that particular style that works best for you can actually change your whole trading game. Because you
Exactly.
cannot, maybe not have time and you want to trade every day or every minute, or you want to be a scalper, maybe in and out every 5 minutes. No,
Mhm.
you would be totally distracted. And anytime you're trading, you need your head to be in the game, and you need to be
Exactly.
focused. So
Need to
that's
be
actually very, very interesting. All right, that's
Yeah.
that's actually very, very good one.
Yes,
Thank
yes,
you.
thank you. So, Daniel, we've been talking about risk management, risk management, risk management. I feel there is no trader right now,
Uh,
that there's nobody that wants to trade that has not heard of risk management. So, how do I decide how much money to risk on every trade?
all right, that's actually very relative. All right, because it's very, very relative. It just made me remember this particular guy. His name is Roger Banks. He had he showed the whole world his trading journey. This guy risked between 1 to 2% on every trade. He started with about $50,000, and I think in about 2 years he was able to grow the account to about $9 million, just risking 1 to 2% per trade, which is actually amazing. It shows that you can actually risk way little, and based on or built up on compounding effect, you're able to do so much more. Because imagine doing 1 to 2% on every trade and it keeps compounding. The next trade, your 1 to 2% is larger than the previous one, and you just keep building before your account is actually quite massive. So risk management is very, very important. Just try as much as possible to keep your risk very low, very minimal, or what you're willing to expose yourself to. Keep it that way. Don't overexpose yourself, overexpose your accounts to risk. All right. So the good rule generally is between 1 to 2% of your
Okay.
trading account
Yeah.
per trade.
And we're talking about a small account here.
Well, if it's definitely, you don't want to be risking 50% of your you don't want to be risking 50%. You have just a small account. Definitely want to be very, very, very cautious with your trading so that you don't lose. In fact, a small account is very easy to lose,
Yeah,
right?
very easy. In fact,
So you want to
yeah.
be extra cautious with your
Mm-hmm.
risk management game. And also use a stop loss.
Ah,
Yeah, use a stop loss. Don't
mhm.
leave your trades exposed.
I'm sure experienced trader, we've learned from that. Like,
I
please.
tell you, yeah. So make sure you
Eh,
use your stop loss
this market
orders.
can be crazy, so stop loss is very, very important.
Yeah, and if you actually don't know what a stop loss is, right? So stop loss actually is like an automatic order that helps you to close your trades out automatically if the market goes against you, right? So
Mm-hmm.
using the stop loss cannot be overemphasized. It's very, very important. And spread your trades out so you're not betting everything on one idea. So don't risk 50% on one trade. No, you can actually
No.
risk 1 to 2 on one trade. If you find another trading idea, you can still risk another 1 to 2% that can help give you a better trading result. And also remember, don't chase your losses by taking bigger risk.
Very important.
You know, one particular
Please say that again.
bad. Okay. Don't chase your losses by taking bigger.
Oh my
Yes.
God.
Right. So, and this is one particular mindset that 99% of traders have. Anytime the market is going against you, you just want to keep entering into the market. Why you don't do that? All right. And it's actually it's like now a normal practice, and
Yeah.
it kills a whole lot of accounts, right? It kills a whole lot of accounts. So don't chase your losses by taking bigger risk, and also stick to your plan. Keep your emotions in check, right? Keep your emotions in check, and trust me, you're good to go. All right, on the basics.
Yeah, what you said cannot be over. Like, I don't think we can say it enough. Like, do not chase your losses. Do not chase your losses. I know that, yes, okay, market is buying and I'm selling. I am entering buys and sells. I just want to be able to make it back. Don't forget here that you're working with a small account, and that is one of the easiest thing. I mean, people lose crazy money in this market.
Even if you're working with a big account, like
Yeah.
you have a big account size, let's say $10,000, $50,000, still that particular practice is a bad
Yeah, so
one.
I'm saying that people lose money, even like crazy money
Yeah.
on the market. I hear telling someone say, "Oh, I lost $1 million," and you have $100. Please, you would not survive. The
Yes,
market
so
is crazy.
just be
So
very, very careful.
yes,
Don't
you
chase
would
your
not.
losses, very important.
Yes,
Natasha, you made mention of something.
okay.
Technical and fundamental analysis. You said that you can separate them. So now, in terms of technical analysis, what are different? Do I need to use both? Do I need to use them separately? What do you think?
For me, basically, it is applying the both to be
Okay.
able to have a more informed decision what you
Informed
actually
decision.
want to do. Because when you talk about technicals is basically just, all about reading charts and looking at the past price move.
Okay.
You can just use simple tools like moving average or RSI to decide when to trade in the short term. So it's just like we're using the past action of price to determine what is actually going to happen. And then fundamental, on the other hand, looks at the big picture. We're looking at the news, we're looking at earnings, we're looking at interest rates, we're looking at economic data. And many traders mix both methods to get good timing and understand the overall market direction.
Well, true.
Yeah, so that's why I said, for me, you cannot do one without the other. You have to literally bring the two together so that you are able to see the bigger picture.
Yeah.
And especially once you are a long-term investor, you cannot just depend on your technicals alone. You also need to understand what is happening within that particular economy so that you know how to manage your risk and also how to claim your rewards. Because
well, true. That's actually very important. And when it comes to fundamental analysis, some traders, especially newbie traders, they see it as a time to gamble their way to make a lot of money. But I've seen some traders that actually trade basically fundamentals, but they actually plan it. They use some technical tools to plan it very well, and they're able to make some interesting profit from that. And I'm of the opinion, and I've noticed something, that if you are trading in the right direction of the market, the fundamentals just propels the market in your direction further. So if the market is probably based on trend, based on market sentiment is bullish, and you go into it, by most times the fundamental propels the market in that same direction. So you want to make sure that you use both, right? Both the technicals and the fundamentals. It gives you a good opportunity to make better trading decisions. Yeah. So okay, go ahead.
So I wanted us to actually talk about something, right? So it's just about, how can I actually set realistic trading goals and measure my progress?
All right, that's actually very, very easy, and I'm not going to go too deep. I'll just take it on a surface level, because always having a plan helps keep you in check, right? So you cannot just say I'm trading, you don't have a goal that, okay, I want to make maybe 10% or 20%. Yeah, trading could be flexible, right? There's no fixed return, it's dynamic, right? But you still want to have a particular trading goal or a particular threshold. So for instance, you're not looking to double your account overnight. No, that's actually a bad mentality. You want to stick to the game of, okay, I'm going to do 1 to 2% for every of my trades. Okay, by the end of the month, I want to make between a range of maybe 20 to 50% of my account size if everything works out very well. So you don't need to compulsorily have like a fixed, say that okay, I want to make 10% this month. So you can give like a range and stick to the risk parameters of 1 to 2% or whatever parameter that you set for yourself that is really, really realistic. So you want to start small. Don't try to double your account overnight.
So if I actually can double my account overnight.
Well, that means if you're trading 1 to 2%, you can't double your account overnight. Come on.
Yeah, well, I'm saying, what if I actually get to
maybe there's some crazy returns, or maybe the market moves wild that period and you do some crazy. But if you're doing 1 to 2%, you can hardly make double your account overnight.
Yeah,
Come on.
don't mind me, guys. I'm just saying, because I mean that's like the goal of every trader.
Yeah, true. You
Being
want
able to double what you have within a short period of time.
Times 5, times 100 even.
Yeah.
You want to really make that money.
Yeah.
So just keep it simple, like I said. And you can also have like a journal or notes where you write down maybe your emotions, write down your trading plans, or maybe some triggers to monitor your progress, right? There are sometimes probably there are some things that triggers you to do some things, or maybe you see some certain amount of losses, and what triggers is just to try to make the money back. You just want to make all of those things, try to put them down. It helps track your progress so you can manage and avoid those triggers going forward. So you can also check your progress every month or quarter to see how things are going, because consistency is the key to a long-term success. Very, very important.
If there's one thing I'm sure about, is that this market would help you discover a lot of triggers that you have.
Yes.
Like
True.
you would be angry for no reason.
Yeah.
Especially when you lose money. So guys, we do not want to be angry for just a reason, right? So we want to be able to put all of this into practice. Especially, don't forget that the goal is to make money. However, we are all not starting from the same place.
Yeah.
Some people are starting from $5,000. Some people are starting from even $50. But once you decide that you want to take trading as a source of income, you have to be willing to put in discipline. Exactly. I think we spoke about discipline last episode,
yeah,
right?
We did actually, when we're talking about psychology.
Good.
Mindset.
You want to be able to put in discipline. You want to be able to understand what is achievable. And you have to be realistic, right? You do not want... we have a lot of crazy people out there who tell you, oh, I'm ready to flip a $10 account to $1,000 account. It's possible.
Yeah, it is.
Yes, but it is actually sometimes it's not realistic.
At all.
Especially within a short period of time.
And you have to do that 10, 20, 30 times for you to get it right.
And the risk is just really massive.
Yeah.
So except you, and I feel if you're actually going to lose like maybe $10 10, 20 times, just put in exactly
already.
Just put in $200, $300 and just do so well on the market.
Yeah,
right?
True. Yeah. So it's actually this session has actually been very, very exciting, and that's it for today's episode on Market on Mic. Right. So I actually hope we're able to answer some very, very important questions out there for maybe beginner traders or traders that are struggling to find their feet in the game fully. And I actually hope they enjoyed this particular trading talk.
And guys, if you followed us from the very beginning of this month, this is the last episode for the month of March.
Quite exciting.
Oh my god. It has been quite exciting, however challenging.
Yeah. True. And I actually hope that the value that has been passed across has actually changed a lot for our listeners out there, and they're able to grow and make use of those information to make better trading decisions. Because at the end of the day, our goal is to help you to make
good money. And guys, don't forget, we're going into the month of April, and that is the beginning of another quarter. And I'm sure we already, if we didn't meet our trading goal or our money making goal this quarter, that's fine. We can use this as a lesson. We use a lesson. I'm sure we've made mistakes, we've made progress or whatever. But just like Daniel said, you want to have a journal, because now you want to be very intentional. You already know the mistakes you've made. you know what has worked and what has actually failed. And we are not going into the next quarter to repeat the same things that we did in the first quarter that did not work.
Yeah.
So from next month, we're going to be talking about trading strategies.
Exactly.
We're
We're
going
going to be bringing in some
deep into
strategies.
the soul of trading.
So you don't want to miss any of our
So-
episode that will be dropping.
Yes.
And we're going to be inviting some crazy and some
Yeah,
guys
people
that
that
have done
we've
big
actually
things.
seen them do big things.
Exactly.
I mean, people that also even motivate us to want to do big things. So we're going to be there. We're going to be there, and it's been a lovely ride this month. I know that at least I got to learn from Daniel, all the Daniels that I had to meet this month.
Make it look fun.
Yes, I've got to learn a lot, and I know that actually my trading has improved.
Oh, interesting.
Yes, it has improved, and the way I see the market is quite different than what I would normally do. So, guys, it's been really, really exciting, and we hope that you're going to continue with us on this journey.
You can't leave us now.
Remember, the goal is to make money, and we're
Yes.
actually here to do that. So we should actually become your best friends because it's only friends that like to help you to make money, guys.
Yeah.
So thanks for listening, and if you like what you heard, please subscribe and leave us a review.
Yeah.
And follow us on our social media platform.
On
We're on
Instagram,
Instagram, Twitter. It is Market on Mic.
Mic.
Yes, we're
Yeah.
bringing markets to you. So please, and don't forget to subscribe and leave us a review. And we cannot wait to share more trading insights with all of you the next time.
Yeah. So until then, so keep learning, stick to your plan, happy trading,
And see you in the market.
Bye.
Bye.